Welcome to another episode of Ben's Fireside Interviews. Today we've got Jai Rupani, who heads up the Dinesh Hinduja Family Office and founder of the Aikya Connect. In his role at the FO, Jai manages a multi-asset platform of both public and private assets. Prior to becoming head of the family office, Jai was part of the investment team of True North, a $2.2 billion India-based private equity firm. Jai has a technology background, having worked for RBC in San Francisco and raised capital for technology businesses. Before we jump in, I'd just like to ask everybody to subscribe if you like this content and give us the old thumbs up on YouTube as well. So Jai, welcome, and love to hear more about you, and then we can delve deep into the India story. This is what we want to hear about. This is the most fashionable thing that we're hearing about from an international investment portfolio allocation perspective, but it's a tough place to make money. And if you like the way that people are looking at India, they love the idea of investing in India, but are scared of investing in India. So maybe you can unravel the investment opportunity for us in the next half an hour or so. Over to you, Jai.
Oh, absolutely, Ben. And lovely to see you again and lovely to connect today. I know we're sitting across the pond, but such a delight and thank you for the invitation. Really looking forward to our chat. Lots going on in India. Happy to help all our viewers decipher the code. I think you've covered a lot of my background, but I'll just touch on a few things. Like you said, today I wear two hats, right? One is the family office hat, which is an allocator's hat. Our family business was India's largest garment export firm. It was listed back in '05. This is almost now 20 years under the brand Gokuldas Exports. And then we subsequently sold a majority stake to Blackstone Private Equity. It's interesting, I've had my life between San Francisco and India doing tech, investment banking, private equity, real estate development, and now the family office. And it's just interesting to see how India has changed in the 25 years. And I know we'll dive deeper into some of the shifts that are taking place. But personally, people ask me, would you do another role? And I say, hell no, because honestly, I love managing our family office. I love it being multi-asset. We've got real estate assets, public markets, private markets, right? All of it, all flavors. And it's nice to be at a role at 50 to be able to decipher amongst all of it. For those who are younger listening into this, don't sweat the hard work phase, because when you're 50, then you can look at tech and go, we're not doing this in about 5 minutes. So that helps. I think pattern recognition is critical. And so today, two hats, the family office hat, the Aikya Connect hat. And Aikya Connect was born out of the need that India's family office ecosystem was growing. It didn't have a secure and safe place for conversations, for camaraderie, fellowship, and deal sharing. We said, why not I set it up? And God has been kind. We are now 80 families from across 16 cities, 6 countries, all investing into India and roughly managing about 30 billion of their family wealth. I think having a non-commercial nature for the business helps it stay true to the ethos of bringing an ecosystem together. But we can obviously dive more into that.
Yeah, I think that really puts you right in the heart of what's really happening in both the kind of the wealth management work part of India in a very big way, but also really you're getting a very good understanding and feel for how industrialists and company owners and wealth creators are really developing in India and what they see as the opportunities. So Aikya Connect, I think, is a great place to hear more from you about what those families' thoughts are about investment opportunities within the Indian sort of ecosystem. Maybe it would be really good to understand a little bit of the sort of economics 101. India is in a very enviable sort of growth spurt at the moment. It's always competed with China in terms of that sort of the big emerging market in terms of population and economy, but India looks like it's winning out at the moment. So maybe you can give us a little bit of an economics lesson in what's happening to India at the moment.
Absolutely. So let's start straight from at the top. So let's talk about GDP growth. Today, we're forecasting GDP growth at about 6.5%, which is not bad. It's a healthy average from the last, I would say, the last 10 years. Prior to this year, it was close to 8. So we are
Yeah.
cooling down a bit. I think post COVID, there's across the globe had this whole consumption spree, starting off at a very low base effect, and we saw a lot of growth. We saw growth across sectors, growth across consumption. So I think India starting off with a great growth story. Number one. Two, what is interesting is inflation's been benign, right? We have been lucky. Historically, inflation, if you went back to 2012, you'd say, inflation's about 9%, 8 to 9%. Today, it's a sub 4, almost 3,
It's
which is
great.
unheard of
Yeah.
for a developing economy, right? And so you see a certain set of stability coming in. You also see government reforms, a very stable government with PM Modi at the helm, second term, extremely strong tailwinds for where we need to go. You look at per capita GDP is gone from 2,200 to 3,000 USD, right, per person. And a lot of times people compare that. They said, go and look at China. Look at how China changed when it was 3,000 USD to 8,000, where it is today, roughly about 8,000. It's a sea change, right? There's one thing when you go from 1,000 to a 2,000, you're trying to solve for, like one of the, I really like this gentleman out in Delhi who said, it's very simple. 1,000 to 2,000 makes people say, I can go
Yeah.
afford milk for my children. Because you're talking about bottom of a pyramid, right? And but then when you but 3,000 to 8,000 is a whole different ballgame. It says, I want to now buy my first air conditioner. I want a television, a refrigerator. I want to send my kids to better schools, not just the public schools. I want to consume better product and food. And at the upper tranches, I want to buy a motorbike, a car, I
Yeah.
want to travel. And that, Ben, today you try flying domestic in India, and it's like taking a taxi cab. It's literally, and these are not
Yeah.
cheap flights anymore. It used to be like $50 to $60 to fly between cities, right? Today I'm spending on average at least 150 US for a single leg across metros that are not even far. The farther metros are close to $200, $300 a leg, right? It's getting
Yeah.
extremely busy. Right? Growth comes at a price. So I think from that perspective, you look at the demographics as well, right? People talk about the United States, 400 million people consuming per capita incomes, of course, right at the top. They're obviously consuming and they
Yeah.
consume for the rest of us, right? It's 70% of consumption goes there. But if you think about 1.4 billion population, 350 million of it middle class, who have not seen a down year for about 14 years. So you can imagine pay scales going up anywhere between 8 to 15% a year. You're talking about folks who now are making close to 100,000 US, right? Engineers making that kind of money in India. And it's not really that expensive to live here,
Yeah.
right? So where's that money going? In buying new homes. You see the real estate business skyrocketing, right? 20% per annum last 4 years. So it's very interesting to study the slices of demography and who's
Yeah.
spending where. And of course, there are, I won't say everything's pretty, but fundamentally, like you said, top down macros, everything seems to be falling into place. It's extremely stable economy, consuming internally, not dependent on imports, except
Yeah.
for some oil, not dependent on consumption coming, export-driven sales are not really shifting much. And we can talk about Trump and its impact a bit later.
Yeah.
But you get my drift on how this is
And it's
coming
interesting. I
together.
mean, I wonder if you could focus a little bit on where the growth drivers are coming from. Is it, you've touched on consumption, Is it across the board, or are there specific sectors that are seeing more growth? You mentioned real estate, but is technology and outsourcing still a play here? Is it mining? Is it industry? And then, so that's the first part of the question. And the second part, I guess, is this already reflected, presumably, in stock market valuations? Are we too late to the game? And then we'll move from there.
Excellent question. Excellent question. I think let's start from the top, right? Which is, let's pick up where we left. Let's talk about demographics. Middle class getting makes more money, starts spending on travel, tourism, healthcare, and food, right? So this is that consumption bit. More refrigerators, cars, bikes, right? That piece
Yeah,
is humming, right? The second bit is with the tariff wars between the United States and China. What has happened is companies have realized that, hey, I can't just do all my manufacturing in China, even though it may be the best, lowest cost producer and it is delivering a great product today. They realize that, hey, I need a backup plan because all the disruptions with tariffs has led to huge supply chain issues. I just saw today's news. In the month of November, Apple shipped out $2 billion worth of iPhones from India.
yeah, yeah,
Right? This is not a small number of iPhone, just iPhones being manufactured and shipped out. $2 billion worth in a month. So you can see global manufacturing has realized that we got to be in a country that's a
yeah.
democracy. We want good governance. We want the ability to build great factories, and so even our government has given incentives towards manufacturing, so that we are now the whole new China plus one game. So that's worked out well. We see that. So we see the consumption story. We see this. A big push in infra. We've got high speed rail. We've got a golden triangle of highways being built. We've got huge amount of infra. Every city you go in, there's a lot of banking going on to get the infra right. Because think about it. Today, I live in Bangalore. Bangalore's got 18, well, almost 16 million people. Right? It's 16 million people in one city. Bombay is at 24 million. These are monstrous ecosystems. And so, is it perfect? No. These are the three main pieces where the growth's coming from, where the
Yeah.
spending's happening. And I would say that's the core piece.
And that second part of the question around stock market, and is this growth already reflected? Are foreign investors, and I want to talk a little bit about access, but are foreign investors looking at it now too late? Has it already reflected and discounted this incredible growth?
I believe so. If you look at current valuations, large caps are trading at about 24 times PE, which is above the historical averages. Small and mid caps are much higher. So small caps are probably at 35, mid caps at 30 times PE. So it makes it a hard
Yeah,
market to enter today. However, that's looking at a basket,
yeah,
the market, right? The reality is active managers will do
yeah,
far better. So if you look at our own portfolio, it's a mix of strategic, market driven, or I would say strategic allocations of 40%, which is where money goes in every week into a set of accounts across a set of strategies that are very
yeah,
market hugging,
yeah,
beta strategies across large and small. We don't, this is 20-year money at least, so we don't really break our heads. However, the next 40% is all active money. It needs to deliver alpha. The fees are strong. The engagement's heavy, right? So we've got this two-pronged approach, and then you keep evaluating every sort of 3 years to see which alpha managers really delivered, which didn't deliver, who can deliver across cycles. The good part is the Indian ecosystem, the capital markets has
yeah,
got depth now. It's one of the, I think, if not, it is the biggest derivatives market in the world. It has phenomenal depth in terms of the number of stocks. I think 6,500 stocks, and so there's a lot of stuff you can still pick out. It's not as efficient as the United States, right? You and I have chatted before where So this active management really paid dividends in the
Yeah.
United States, right? Most active managers are not able to beat the
Correct. Yeah.
benchmark, right? And so I think India is unique. So I think finding local managers that are the strong governance, ethics, are doing unique bespoke strategies is super critical for to deliver outsized returns. So I would say there is an opportunity, but you got to
Yeah.
find those people. And of course, for your viewership, just let me know and we'll send
Wonderful.
you our
Thank you
best.
very much, Jay. And you really touched on it, but I guess there is now a depth of asset managers in terms of quality and in terms of size as well. From a long only hedge fund, long short, there is a level of sophistication, presumably, that has really come on strong, right?
Yes. So I think in any cycle or any growing economy, you'll always have, it's like what they said, even in the United States, it's like people who worked at Blackstone for 10 years, then went and built their own funds, right? So India is now in that stage. In the last 5 years, if you just look at the map of the new asset managers that have come up, it is like mushrooming because the financialization of savings has
Yeah.
really kicked in. Historically, people did real estate as number one, similar to China. Asians have this bias towards buying more real estate. There is no
Yeah.
social
Yeah.
security in our country. We
Yeah.
don't get, there is none. If you didn't save enough money during your lifetime of growth,
That's
the
it.
government's not
Yeah.
paying you anything. You have to quickly, as you make money, lock in that house because you're going to need it for retirement. So
Yeah.
that was the
Yeah.
historical thought. But the youngsters, the new gen, opportunities are 20x today. Pay scales are 20x. So they're making more money than their father made in 10 years in 1 year. So it's insane for them that unlocking of that. So I think there's a lot of more going into the equity markets. So there's the AMCs have come in, and I think it all comes down in the end to finding the right spot for
Interesting.
that growth.
Let me come back to something you said earlier around the market PEs and what PEs are in relative to growth, right? So 24 times for the blue chips might
Yeah.
be high, but what are you looking at when you talk to market players in terms of the earnings growth over the next 2 to 3 years amongst this group of companies?
Spot on question. The earnings growth over the last, I would say, 16 to 18 months has been not
Okay.
flattering. In COVID, we were running at close to 15 to 16% earnings growth, compounded over 3 years. You can imagine what's happening to the stock prices. And then in the last, I would say, 18 months, that 15% has dropped to
Right.
six and a
Right.
half right? 6.5 to 7% now. Obviously, you came up from a low base. Now you're at a high base. Very high to grow at 16,
Yeah.
18% earnings growth
Yeah.
continuously. And so I think this is time correction currently happening in the market for the last 18 months. And what we're seeing now is the green shoots of earnings growth are now
Okay.
emerging. So from a timing perspective, this is a
Yeah.
great time to shop. While the headline indices, if you look at the indices, you'll be like, hey, it just said it hit an all time high, right,
Yeah.
2 weeks ago. But that's not accurate because the reality is there, again, comes down to attribution, right? So where is that really coming from? What stocks are actually giving the weight in the indices? What's triggering that? So I think, like in any investment decision, you're peeling down layers to get to the fact to say, is this structurally back? Is the valuation right? Is the growth kicking back in? Right? Are all the fundamental factors ready
Yeah.
for the next leg of growth? From a long-term perspective, of course, we
Yeah.
are very bullish. We are holding domestic as well as offshore capital. The Our belief is that this will turn. It is slowly turning. The expectation is once the Trump
Yeah.
tariffs settle down, India and the US have still not been able to nail down the final tariff regime. That's created a
Yeah.
lot of overhang. So A lot of export stocks have taken a beating. There's no visibility. Inventories are piling up, right? So I think you stay out of exports, stay towards domestic consumption, stay within hospitals and all the capital goods, etc., and you play on the growth themes,
Yeah.
you should be okay. But steering out of those zones, I think you would have to look at where's the growth, because a lot of companies have lost 20 to
Yeah.
30% value in the last.
Yeah, but which makes sense given, as you say, that the sort of the export side of the ledger has certainly been affected by these tariffs. Let me ask a little bit about in terms of off equity markets, but in terms of the private equity venture, how are those industries been developing? And then the final question from the view of foreign investment into India, what do you think are the challenges and how should a foreign investor approach the Indian market?
Sure. So private equity in India has done fairly well as long as you stuck to the top
Yeah,
five managers. I think the top five are now over
yeah,
$5 to $10 billion in worth in AUM size and have delivered sort of 20% IRRs, right? With DPI, TV,
yeah,
all coming through, right? But that's the top five. In any market, and we've seen this across the globe, right? It's the top decile that really crushes it. The next decile just about gives you your money back with some return. And the next
yeah,
80% don't do anything, right? They just about peter
yeah,
or disintegrate. They get acquired, right? Some may just peter along for another 20 years, but they're not really moving
yeah.
the needle for any of us. Same thing in India. Venture has had a very interesting. So I've been investing in venture for now over 20 years in the country. We do it through funds. We do have a few that are a few directs,
Yeah.
but very limited, unless we have larger stakes. Venture tech has not played out as well as I would have liked. Okay. We're an LP in over 12 funds. I see limited DPI and
Interesting.
extended lifelines, right? So what was 10 plus 2 is now become 12
Yeah.
plus 2. So you can imagine you're entering into a fund in a high inflationary environment. Let's just go back to 2012 as an anecdote. I'll give you a real anecdote. 2012, I entered a fund. I could make tax-free income from sovereign government bonds at 8.8%. Tax-free. We played that big time because I think that was a great run, right? Those are currently at 5.4. Okay. And these were 20-year, 30-year instruments. Now, so let's assume I took 100 rupees from that and I put it into a venture fund saying, hey, you should ideally give me 18 to 20% net IRRs. Those net IRRs are actually at 11 today.
Wow. Yeah.
So that's not a very happy spot for that vintage, right? Have they blown up my capital? No. Money's come back, DPI has come. DPI was 1 point, say like 1.8. But your net IRR is 11. So it's just for all that circus of investing into 40 different companies, having two, three blockbuster unicorns, we're like, we're still only at 11%.
Yeah.
That's not great. So I'm worried about venture,
Interesting.
honestly.
Yeah.
That's number one. I think venture in consumption is done great. Okay. There's this whole mobile shift, right?
Yeah.
Everything's on mobile. And data in India, just to give you a benchmark, for about $2, you have unlimited data on your phone. So what does that do to the consumption of digital purchasing, right? It's gone mad. And so direct to consumer, traditional consumer companies needed distribution. The moat was distribution. Now I can launch $20 million cereal brand
Yeah.
overnight with 20 people in an office, outsource manufacturing, entirely social media driven, with alliances with different influencers. I can build actually a $10 million brand in
Wow.
less than a year.
Yeah.
People are doing it. Now, can you sustain it? Is a second question. I don't know. We'll know. But we've done exceptionally well in the consumer funds that
Yeah.
we've put money in. They've really hit the park. You're talking seven
Interesting.
X's.
Yeah.
So It's a good sweet spot. Now the next set of stuff is manufacturing VC. This is where the venture capital world is moving. Is manufacturing driven, deep tech, drones, advanced lens design, AI algorithm based investing. All of this is now the next flavor in VC today. And that's still to play out. I still feel India maybe slightly behind relative to obviously the valley. The valley is where it's all cracking
Yeah.
meaning crackling, I
Yeah.
would say, doing very well in terms of innovation. So from that was that's on the VCPE side. And you had one more question, I believe you
Yeah.
said, was on
Foreign investor
access.
access. What's the best way? What's the optimal way?
Right.
Yeah.
So let me come to, so there are multiple ways. So let me touch some of the most popular ones. In India, there is a jurisdiction called the gift city. The gift city is basically a tax-free conduit. It's like an offshore entity sitting within India, blessed by the government to say you can bring foreign capital in from here and it can be invested into Indian funds. So there's a whole slew of interesting fund managers who have these gift city
Yeah.
entities. That's number one. For the larger ticket ones, for folks who are large family offices, then you're looking at foreign portfolio investment route, which is allowed. It has its own
Right.
set of regulations. And primarily, these are
Okay.
the two main ones for entry into India. It's not so hard. I think they made it very easy for money to come in. You just have to keep in mind one thing is that there's a dollar
Right.
depreciation. So you lose roughly about
Okay.
4%. If you bring it in and you take it out, every year the
Right.
rupee depreciates
Yeah.
against the dollar. And so that is a bit of a downer, frankly.
Yeah.
But
No,
it is what it
absolutely.
is.
And thank you very much for that, Jay. Let's turn our attention more towards how you perceive your investment globally. How much do you think the family office sort of environment is investing in global markets, and is it increasing because you're getting more access to foreign markets, or is it increasing because you're trying to find alternatives to a heavy concentration in the Indian market hitherto, where you've pretty much invested, I would have thought, a significant, if not almost all of your assets? So it'd be interesting to see how Indian families are investing abroad. And then I really want to get into and discuss the Aikya Connect platform as well, and understand how that works and the sort of information that comes out of that.
Sure. So let's start with the first one, which is global investing from Indian family offices. I
Yeah.
think it's a big trend. And honestly, we've been doing offshore investing for now over like 10 years. And we've done it step by step. There are capital controls. And so within the capital control regime, you
Yeah.
do what you can do. But do family offices want to do more? Absolutely. Do they need to get blessings from the regulator? Yes, they do. A lot of them have done that. They have offshore entities in Dubai or Singapore. And so
Right.
that's a growing
Yeah.
trend. It's a big trend. And I think it's important. Honestly, I feel sitting in India, it would be fair to say you should have roughly 10 to 15% of your book offshore. Now, there are multiple ways to do it. You can even do feeder funds out of India, rupee based, easy to do, right? Really no stress, no forex conversions, no capital controls. So we
Yeah.
do a host of those. That's number one. We do a host which is offshore through the forex route, and so that works. And I think that's a growing trend. If you ask any family office, they're also looking at the same way that Gift City works for inbound. Gift City works for outbound. And there are ways to run larger checks through that system for Indian family offices. And so that's a growing trend. It's still new, still growing trend. And the second one, coming to Aikya Connect, Aikya Connect is a labor of love. For me, it gives me no greater joy to be able to create a space for family offices within our country. We are not sitting in London. We are not sitting in New York. We This is new. This is a new
Yes.
space, right? It's historically family offices. The term is only 8 years to 10
Yeah.
years old in
Yeah.
India, right? everyone had large business houses, including ours. The CFO office was always leading investments for the family for the
Yeah.
longest time. It's only now that we have a dedicated team that sits outside separately with a clear mandate, manage this, de-risk it, work with each stakeholder's requirements of risk, reward, and liquidity, right? And really customize this portfolio and observe it to maximize returns in a very systematic way. IQ Connect brings together single family offices across 20 different events a year, 10 of them virtual, 10 of them in person, with a simple goal. We curate exemplary experiences to allow all members to connect with each other. So we have these roundtables, we have curated forums. So we just launched, in fact, the IKEA forum, which is called the IKEA Council, where principals and CIOs come in groups of 10 every quarter, and they actually present their portfolio journey.
Interesting. Yeah.
How did it start? What happened over the last 10 years? It's immensely valuable for everyone in that 10 seater, because when was the last time you actually presented for 45 minutes to your friend that, hey, here's what I own, here's how I built it, and here are the mistakes I made, and here are my lessons. And hey, I should not have probably invested in a fund. If I just put money in the NASDAQ every week, I'd probably be
Yeah.
liquid and with
Yeah.
a lot more money, right? A lot of these realizations are priceless. They don't show up in the wealth commentaries from the big banks. They don't show up in the McKinsey reports. These are things that only can be
Absolutely.
spoken of with
Yes.
Chatham House Road. And so I think for me, the Council Forum, the big conferences that we do, both onshore and offshore, and bespoke events, really bring the room to connect with each other. Today we are 80 families. The goal is we get to 100. Honestly, Ben, I think
Yeah.
hundreds a lot, even for one country. And my goal is we
Yeah.
just stop, we just pause, and we just do a lot more with this community. And then if anyone leaves, we add someone. But otherwise, I think good 100
Yeah.
families said there's so much knowledge and
Already embedded
intelligence.
in that. Yeah.
And
Absolutely.
it's interesting, a lot of folks think we're only Indian families. I have 9 families from Singapore, 5 from Dubai, 3 from London, 1 from the US, 1 from Sydney, 1 from Indonesia, right? Anybody who's sitting offshore and is investing into India, this is a great place to just say, hey,
Yeah.
am I with the
Yeah.
right fund manager? Can you guys, or I'm looking for 3 fund managers. I need to deploy $5, $10. How do I? Can you connect me with the guys you like? It's just
Yeah.
priceless. We're seeing the international folks really benefit because you can't
No.
get that info. You just that information
Absolutely.
exists, and
Yeah.
no one's going to tell you.
Absolutely. No. Actually, you
At least the salesperson.
absolutely. You read my mind because that was my next question in terms of are you accepting foreign single family offices into the network? The answer is clearly yes, up to a point in terms of the numbers that you want to kind
Yes.
of limit it to, which I think makes a ton of sense because ultimately the knowledge base you're going to get out of 100 is immense compared if you have 1,000 you're just going to have a logistical nightmare and you're actually probably just doubling up on the level of depth and knowledge, but not getting that compounded marginal benefit from having more and more people. It actually just dilutes the messaging, I think. So that's fantastic, and we're very happy. We'll put the links to the IKEA Connect into the channel and everything. So of course we'll do that. But maybe the last thoughts and words from you to the audience and to the viewers and to the investors on India. What do you think?
Honestly, I
Yeah.
believe it's a long game. If you think about where in the world are you going to get more than 50% of the population under the age of 35 who are consuming rapidly, right? And only with consumption do you get growth, right? So that's number one, right? Is to really look at the scale of consumption and from that bucket, right? And They're having kids, the kids need schools, the kids need hospitals. This is a bulging population center. I think that's very critical because the rest of the world
Yeah.
has stopped consuming. As you get older populations, so our needs, we don't need to buy a new car. The one I have, the Subaru looks great. I'm good, right? I want to save money because I'm living longer, right? The whole longevity thing is also impacting how all of us live, right? I need my money to
Absolutely.
run another 20 years, right? Life is getting stronger. So that's one. Second is in any developing economy, the government is critical. The stability at the center in terms of policy, in terms of fiscal and monetary policy with interest rates, as well as giving money in the hands of people, is super critical to keep this running. Today, it's in my view, we're at a in Goldilocks period. It's perfectly aligned. Inflation's low, GDP growth is on track, earnings will come back, right? And so where our bets are on the country, active managers, as well as passive stuff, but really keeping our eggs here at home. I don't think you can have all of this and infrastructure spend if you just come to Mumbai. Mumbai in the last 5 years has transformed its infra. It has taken the roads to the side of the ocean. You have a full ocean belt like Manhattan. Your bridges are running, right? So there, at least you see the financial capital
Yeah.
declogging itself. And they're actually ahead of most of the other cities in the country. So I'm saying there's a lot of good governance happening. There's a lot of good growth. I don't think folks can afford to be on the outside of this, personally. Even if it is a 5% allocation, I think it's a space. I would tell folks, come visit, come join us. In fact, if they are a single family office, they're welcome to join us at our annual event in April. Ben, you're
Thank you.
welcome too. It'll be wonderful to have you with us.
Yeah.
But come and see, even before you invest. Come and see, come spend time with folks like us, come have chats, come meet a few managers, and you'll be surprised at the energy, the excitement, the drive within India is unparalleled.
Jay, what a fascinating and really interesting journey that you've taken us on. Thank you so much for that. And we really want to get you back on again and talk about the progress that the country has made. Thank you again and have a wonderful year.